So in the second part of this video now, we're going to continue talking about continuation programs now on intraday time frames. It's very important that you have your notebook on this session because I'm actually going to show you some entry techniques and talk about how you can actually frame your setups based on the daily analysis and understanding the narrative. So if you watch the first part of the continuation program, make sure that before you start this that you understand the analysis that we did showing narrative on the daily time frame. If you jump to this video without seeing the previous video, you're going to be confused. All right, without further ado, let's get into the video.
Let's go.
Okay guys, here we are on the 1 hour chart. We're going to zoom through this because we have the daily markings here. This is the most important thing. When you have the daily time frame levels marked, you don't need to do anything with the 1 hour chart or the 15-minute chart. Okay, remember the 1 hour chart is where we scatter point of interest, right, based off the daily analysis. And then the 15-minute or the 5-minute chart is where we enter off of. We're not going to go down to the 15-minute chart. We're just going to stay on the 1 hour chart, and I'm going to show you how simple it is just understanding the ranges. So when price delivered from this swing high up here all the way down to this low, this was 1 week of price action, right? And what I want you to see is in this level, in this area right here, this is what a swing low looks like on the 1 hour. This is a smart money reversal pattern, okay? You have a high, a low, a lower high, a lower low, a lower high. We're trending to the downside, a lower low, then a break of structure here. So this now becomes a swing low, swing high. This is a break of structure. And then you take this range here from body to body, and there's your optimal trade entry right here. It's very similar to what retail traders call an inverted head and shoulders, right? And if you identify with that, then do that. But understand that this is how price goes from a sell model to a buy model, and this is what optimal trade entry looks like when price re-enters a discount and then displays higher. Now remember, we already went through this on the daily. We know that this took place in a course of 3 days. As you can see, this happened on a Thursday. We went into a consolidation and a discount on a Friday, and then Sunday open runs up, and that's tough. So there's an element of time that you have to include in this analysis, okay? If you're a London trader, you're likely to see lows of the days happen between 2 to 4 a.m., you know? And in this case, the low of the week will form on Monday, Tuesday, okay? So this is how the swing will form. The moment that price came up and broke this and closed this day up here, it was very simple. Now you're just looking for entries at a discount of the swing point range, or a runaway from equilibrium of the dealing range that you're in. So from this low to this high is the dealing range. So now you would mark off Asian range, which is right here from 20 to midnight, New York time. What I want you guys to use the Asian range for is to see if price is going to either run the Asian stops, hit an array and continue higher, or run the buy stops, right, and find support at the Asian highs. I know that seems very simple. It really is that simple. And what you're looking for is for price to hit either equilibrium or into the discount realm between the 62,705 or the 79% retracement. So there's a little bit of range understanding to get this right. So if you look at this swing low to this swing high here, price comes up, hits 50%, displaces, pulls back to 382. The 382 is my continuation level on the Fibonacci. It does that and it shoots up higher, and the target would be into the fair value gap. Okay, very simple that day. Now this is all based on the London trader. Okay, New York traders, it's a trending market. You're gonna get down in the 15-minute time frame and do the same exact thing using London as the speculative session to understand, like, oh, we're actually creating higher lows. Okay, so here we go again. Asian range. We want to see price either come into the fair value gap on the daily time frame, which is where this order block is, or we want to see price run Asian stops and then make an attempt to run previous day high. So what is the dealing range? Well, at this point, it's this low to this high. Do we get optimal trade entry? Yes, we do. Do we get a 50% entry in New York? Yes, we do. All right. Remember, that's the strategy in continuations. It's very simple. You want to see price run away from equilibrium, or you want to see it hit the discount levels of the Fibonacci, and it's a continuation. But you got to know how to use your fib, guys. You got to understand that this is the swing point that we're looking at, not this one down here. Because if you use this one down here, you might be like, oh, it's kind of in a premium. Like, don't get into that. Keep it simple, guys. We're in a trending market. We already made a smart money reversal down here. We already had a bullish day, and we had another second bullish day. It's 2 days into the week. The market's already trending. You already see it running towards previous week's price action. And you know that we're trying to fill this fair value gap, because this is where the aggressive selling started. This is the origin point of this swing. This is all a stop hunt to reaccumulate down here, smart money reversal, and push to the upside with displacement. So finally, price gets up there, we get into the fair value gap, we run previous day high. Now we are in a premium range, so price needs to pull back. Why does it need to pull back? Because price doesn't just go up forever, baby. It's gotta get ebb and flow. That's how the market works. We get higher highs, higher lows. So what is price gonna do? If Asia range is up here, this is Asia range now, this is a premium, and we just hit a premium array, so we should see a reaction to the SIBI on the daily time frame. Okay, we did what we needed to do. We got into a premium, and this is why sell days happen, guys, because it's a retracement back to fair value. And isn't it funny how price is fractal? How on the daily time frame this is a big fair value gap, right? And on the 1 hour time frame this is a nice bullish order block at the consequent encroachment. So as a day trader, we know this because we look at the daily to actually get our bias and understanding of the narrative for the whole day. So when we get this reaction at the daily fair value gap, we know that the stealth stops reside under these lows, previous day low. It's not a break of structure on the daily breaking this day low. It's a 1 hour break of structure, and what it's doing is reaching for a discount. We hit this array and we go. Now notice, did that happen in London? No, that buy wasn't in London. Was that buy in New York? No. On this day, we're looking for the buy. So what happens? Let's talk about this, because this is something people don't talk about. How do you manage counter trending the day, even though you're supposedly following the daily bias, buying every day? Is what I'm telling you to do. Well, let's take a look right here. At 2 a.m., price sells down below Asia stops. This is midnight price open. Price comes down 10 pips only. And then immediately after that, creates a bullish engulfing candle. And we go back and we hit this SIBI. And this is 3 a.m. We open. After that, we don't get any indications on the 1 hour closes of price making movement or we consolidate. So in London, there was no trade. So if you got into a trade here and bought off of this bullish order block here, your stop would have been at this low here. And you would have been targeting previous day high for the first take profit and ultimately the premium level of the SIBI. And your stop would have been here. And London is about 5 in the morning. Look at your trade. You would have been in consolidation. The moment you see this happening, you have two options. You cut the trade short, or you hold and accept your stop loss. Now, one could say, hey Christian, well, why is my stop loss below this low? It doesn't have to be. The day trader should put their stop below the array that is holding support on the daily time frame. So what is that? That's this BISI. So you would be putting your stop below the BISI. Now, is that a big stop loss right here? It's 33 pips. That's hardly a wide stop loss for the day trader. And the amount you would get is 67 pips. But look, you would have to hold that in drawdown. So when I say it's a bearish day, this is one of those rollover buy days actually, because price actually creates the low in Asia. Okay, so when you see these things happen, you have to understand when price is likely to be a rollover buy going into the next session. I showed you that on the daily time frame without even seeing the 1 hour price action. I said when price came down to that low there, that was a buy. And that's a New York close buy. So where's the New York close buy? This is New York close right here. Look at where New York close was, at the premium end of the BISI. This is your New York close buy with stop loss below fair value gap. And you hold this, and you want to run it to previous day highs, first TP, and ultimately up here. So guys, even on the days that you think are going against you, then there's always this you got in your back pocket, the rollover buys into the next session. And then look, let's take this off. Not only do you get this rollover buy, look at what Asia does. Displacement to the upside in Asia. We buy all the way up. London opens right here. We consolidate off. Why? Because we've already displaced since Asia. So what happens? The London trader's already in profit with their stop loss below Asia low. The New York trader gets a perfect retest of this dealing range. Remember, the Fibonacci needs to be used correctly for you to actually be successful with it. Look, from this low to this high is the dealing range. Look at the stock market open. Right into the bullish order block here on the 1 hour and the premium level of this daily BISI. And what happens? Volume kicks in and we hit the high. Now guys, these are just a couple of examples. This is going to happen every single day until we get to the swing high. And even on the days that it's quote unquote a bearish day or a consolidation day, if you hold true to the daily bias, you'll end up being a winner. You might have to hold your trades longer. You might even have to take a loss to see that, oh, the market's still in my favor for buys. You know, ultimately, you're going to buy every day until this happens up here. And it always happens just like this. They sink the market. Not only do they run previous day low, they run daily lows with an S, daily lows. Okay, that's when you know price is clearly reversing, and then it just starts trending down. Okay. All right, fam. This was a packed video with a bunch of gems just for you guys. I want you to know that I put a lot of work into this video because continuation markets, this is what it's about. Trend is your friend. You know, you want to always keep it simple. Learn how to identify the dealing ranges, guys. Okay, if Asia makes a low and then London makes a high, the range between Asia and London is the dealing range that you're looking for optimal trade entry in New York. If the range is being formed in London, low and high, then you're looking for optimal trade entry in New York. If you just seek straight continuation from London to New York and then a big bearish retracement down, you wait for price to show the dealing range after a run on stops, and then you take that range and look for a runaway on the equilibrium on the fib or the discount levels. Keep it simple, guys. Continuation markets are so easy. Just follow the daily time frame until it makes a swing high if you're a buyer. When it does that, you know that you got a good, you know, maybe 4 or 5 days, maybe 7-10 days of straight buys. Okay, so make sure you take the time to review this video. It's a longer one, and I'll catch you in the next one. Let's go.